P&G back up. All right, it was down, what, 23%. Then 4 minutes later, it was down 24%. Then we made that comment of that is absurd. What is? I mean,
the machines obviously broke. The system broke down. I mean,
but now,
broke down. We'll have a big investigation.
But now it may possibly go. But there should be an investigation because
there should be. That's why I say this is like there was a 1984 episode like this, a 1985 episode where the machines broke. You got your opportunity. That Monday the machines broke in '87. It's too bad. The system obviously broke down when it went down 400. We're going to find out that there was a glitch in the tape. The machines failed. We should talk to Duncan Niederauer. Find out what happened.
Let me just say though, I took P&G as an example. Yeah, I mean, I'm not trying to say that was the only one that happened with.
Right, but you know, now we'll have a big investigation, a special system, whatever. I mean, here's what I'm saying, is that you go and you no, come on, it obviously broke down.
It obviously broke down.
No, the market didn't work. It broke down. The machines broke down. That's what happened. You know, Procter was never at 47.
Maybe the specialist never stepped in as the buyer of last resort like they're supposed to?
Procter was never at 47. Or if it was at 47, it was for a blink of the eye and one of these fast pool traders got it. I would urge people at home, as we go down again, obviously that down 1,000 level was kind of a moment of great opportunity. But look for stocks that were yielding 2% that are now yielding 5-6% in an hour's time. That's where the opportunity comes in, because we're getting the same kind of bounce off for accidental high yields that we got in 2007, which was indeed the worst case scenario.
All right, I just want to make sure I go through one thing here, too, as we're just monitoring what happened. Market obviously is now down only 519 points. Only 519 points. The fact that I had to put that...
It's a nearly 50% improvement.
It's a nearly 50% improvement.
Yes. Just so you know... Stocks were never at those levels. They weren't at those levels.
But do you realize the fact that after all this, that could have just happened is an absolutely stupendous story?
Well, it is. I think it's a great story. It's the greatest story never told. You'll never know what happened there. It's important.
We don't have to go getting...
But I mean, again, what we wanted to do was apocryphal. Again, we wanted to do was
find... possible that there wasn't somebody trying to liquidate huge positions.
Bob Bassani's on a trading floor right now. Bob, can you just say what happened in that 5-minute time frame on that trading floor?
There's no supply out there. Well, it's been pretty crazy and all of a sudden it went from fairly quiet to a lot of screaming here. I'm trying to grab Steve Starker here, who runs the trading desk right here, who's a little bit busy at the moment. Steve, what did you see? What was going on?
We saw some real panic, a little below 11,000 on a quick dip. Guys came in to buy gold in a hurry, trying to buy some protection. And literally, as soon as they bounced, you couldn't buy anything for points. Things were just gapping up dollars, and all of a sudden there was no supply.
And the important seemed to be, once we split through that 1150 level, which is a very active strike level, Steve, we started to see a pickup in activity.
Big volume on the way down. There was panic selling on the way down, and all of a sudden it just stopped on a dime and turned hard.
And all of a sudden here, we started hearing screaming, buy orders, Steve. What was going on at that moment? All of a sudden, everybody started getting buy orders coming in down here. What happened?
We must have been 20 to 1 on the buy side. It looks like a dip below 11,000 caused panic buying. Guys just started to step in and start to buy everything across the board. Tech and financials mostly.
Tech and financials is going to be a fascinating last hour. I'll be here on the trading desk. We'll be talking with traders all through that hour. Back to you.
All right, let's bring in Bill Schmitz. He's a P&G analyst. Bill, I know you're with us on the phone. What happened with P&G? Is there any rational way that you could describe P&G being down 3% and then down 25 within, 90 seconds to 3 minutes?
No, the machines have to be broken. I mean, there's no fundamental reason for Procter to be down more than 2% today. This should be a day where Procter shines on a relative basis.
So somebody made a whole lot of money, obviously, and when that stock went back to break even.
Oh, absolutely. Yeah. I mean, good. Like I said, no fundamental reason for the stock to move like that.
Jim?
Right. Well, the machines broke. I mean, it happens. So this was just look, there's a lot of machines that go, and there was a technical breakdown, and someone wasn't there at the moment. You think that with humans, you should have been able to prevent that. But I want to stress the fact that if it traded at 47, I bet it traded for like 1,000 shares, and people shouldn't feel like it's a big ripoff. The machines broke.
Here's my question, and I don't know, Bill, whether you would know the answer to this, or Jim. Are those trades going to count? I mean, if somebody made a whole lot of money, but the machine was broken, do those trades count? Do they not count? What happens?
Historically, they count.
They count?
Yeah, historically, they count.
How do you know the machine's broken?
Well, because Procter & Gamble doesn't go down 15 points in maybe 6 or 7 seconds.
Think of it in terms of market cap. Well, what was that? $35 billion in market cap?
I mean, Colgate could have bid for Procter in that 30 seconds. I mean, we got to be a little more realistic. Obviously, the system broke down. We'll hear about why. Now, I think we should speak more realistically about what you can do down 400. Down 400, obviously, we now feel very fragile about the system. Again, if you can find a stock that yields 5, 6, 7 in the 2007 to 2009 downturn, those held up. They were accidental high yielders. Everything else kind of collapsed. So I would look for that if you're trying to look for opportunity. I would not try to look on a price basis, just on a yield basis, because you need that protection in a wild market like this.
All right, we got Andy Bush. Let's bring you in here, Andy. Do you buy this? I mean, it's obviously we're all trying to figure out what happened here, but that this could have been a market already panicky and jittery, maybe some kind of fund somewhere failing, but fundamentally some real errors in machines.
Yeah, I mean, that's typically what happens in these kind of market panics. I remember there was a couple incidences between 2007 and 2008, and certainly in the fall of 2008, where we had these type of gaps, and we were wondering what happened, especially with P&G. I mean, that doesn't make any sense. But it's great to have Jim Cramer on, because I'm wondering, Jim, did you ever feel like ranting again like you did in 2007 with the ECB?
I don't know how to speak Greek. I can't. I mean, I don't know how to speak French. I mean, what is? They know rien? They know rien? I mean,
they're just sitting on their hands, and this is when they should be active doing something, and it's astounding, just astounding. They've done nothing up until this point.
I mean, their silence is so deafening. I mean, let them eat gâteau. I find that, well, that's Marie Antoinette. What I find here is that the lack of confidence they give you makes it feel like that unless I've got yield in our country, what's the point? I'll come in here tomorrow, get my head handed to me again. They're playing, European whack-a-mole with our stocks.
We're throwing every one of these stocks up, and because we're trying to find out, and Scott's working on some things right now at the exchange to get more, how many of these stocks went down that same amount? Because if it's P&G, that's one thing. If it's every one of them, that's another. I mean, is that still something that you could put down to some sort of technical glitch?
When I came out, the market was down 380 points. Subsequently, I said, we said don't buy it. And then it's down 900 points. We have to switch and then buy it. It's back to down 380. Now, obviously, there was some, from down 500 down 800, there was probably a problem with the Dow Jones feed or with the New York Stock Exchange feed.
It would be brought
and we've got to find that out. And people shouldn't feel completely ripped off.
I want to know who made a fortune on every one of those names then. Scott,
you say, but was there too much volume overwhelming it? Is that the problem?
It might have been a software problem.
I mean, that wasn't supposed to be able to happen anymore.
The thing is it wouldn't happen unless we had a panic going on, and that's pretty much what we saw. The other thing, too, I want to just add into this conversation is that I don't know if you've been following what Congress has been doing today, but they've slapped on some pretty big amendments to this financial regulatory reform bill. If you've noticed, the financial sector stocks are getting tagged, especially the big banks.
Looks like we just lost Andy, so let's get Scott Wapner in once more. Scott?
Yeah, Aaron, I'm right by post 8U, and this is where Procter & Gamble trades. I know you guys were talking about the movement, the dramatic movement in that stock, and there was a sizable group gathered around here talking about the very issue. And what I'm told down here on the floor is that a movement like that, or a mistake of a trade, if you will, a bad trade made down here, would be rather unlikely given some of the protections that they have in place. Of course, you know that the way that many stocks are traded now electronically, I think it was Jim who mentioned, could be a software glitch. I mean, it could be anything in some of these electronic markets that take place.
It may not have been there. We had that once before in the fast market in 2008 where the prices weren't real. That notion about there was an amendment slipped in that I don't think is going to make it for a 25 basis point, basically a tax that in order to be able to allow banks to be able to own their capital in short term, particularly to get brokerage fees.
I want to go on the record here as we get ready to hand it off to Closing Bell by saying I think that we've had the most exciting 15 minutes in street science history.
I was 49 bid for 50,000 Procter, and then I sold it at 61 as a single grab and going back to the game. This is too exciting
for the Procter rally.
I'm paying for dinner.